Hello, this is Brenton Harrison with Ultra Borrowers Academy, an online course where we help people with a mountain of student debt take back control of their loans. And we're here today to talk about the different types of repayment plans that are available for federal student loans. Let's get started. When you first take out federal student loans, it can be a bit of a complex process. You have to submit your FAFSA, you have to submit asset information, pay information, and it can be really confusing to determine or find out how much loan you're eligible for in the first place. And the hope is that when you finish school and get to the repayment phase, that it will become more of a simplified process, right? I know my interest rate, I know my payment, it's something I can afford, and it's something that I can pay off in full within a given period of time. But unfortunately, in my opinion, deciphering the repayment options that you have for federal student loans are one of the most confusing things that a person can do in terms of their financial life. There are fixed interest loans and variable interest loans. There are income driven plans and standard plans. There are FFEL loans and there are direct loans. And when you get down to it, you really just want to know, what payment plan do I choose, or which payment plans do I have at my disposal in the first place? So I thought what we would do is we would go through these different repayment programs that are available to federal student loan borrowers. And the hope is that we can give you a better grasp on the different types of loans that are eligible for certain repayment programs, the repayment period itself, and even which loan programs are eligible for things like public service loan forgiveness. So let's get started. We're going to kick things off with the most basic form of federal repayment program, the standard plan. This standard plan is very simplistic because what you pay is a fixed amount that will not change over the repayment period of your loan. Now, that repayment period depends on the type of loan you have, because while all loans are eligible for this type of plan, they typically are going to have your loans repaid within 10 years. What they do is they look at the amount that you owe and the interest rate on those loans, and the amount that you're required to pay each month is the amount needed to pay off that loan in full within a 10-year repayment period. But if you have a direct consolidation loan or certain types of loans, you can actually qualify for a longer repayment period of up to 30 years. This is the standard plan, where what you pay is the amount that is going to stay the same for as long as needed to repay that balance in full by the end of the period. As I said, all loans are eligible for this payment plan, but unfortunately, standard plans are not a qualifying payment plan for the Public Service Loan Forgiveness Program, which, if you've watched any of our past videos, is a federal forgiveness program where certain borrowers who work for 10 years while employed by a nonprofit or a public service entity can have their federal student loan balances forgiven in full at the end of that period. But unfortunately, the standard plan is not an eligible plan for public service loan forgiveness. Now, there are some loans that you're trying to have forgiven versus loans that you're trying to pay off in full. And we'll talk about the difference between those two options in a second. With standard plans, you're trying to pay off your loans in full. There's no forgiveness. Whatever you pay will fully repay that loan within the given period. And when you're trying to pay off a loan in full, you want to make sure you're aware of your competition. What else is out there that's another option for how I repay this debt? For example, you might have a federal student loan that you're paying off at 6.75% interest. But you might see that in the private space, whether with a student loan lender or a bank, they'll refinance those federal student loans and take on that debt, and you could pay it for the same period of time at, say, 4.5%. You want to make sure you understand the pros and cons of federal student loans versus private student loans so that you're aware of when an opportunity might exist where you can benefit yourself by refinancing with a private student lender. But you also want to know the pitfalls of these private student loans so that you don't do so with haste. Because while you can make a federal student loan private, you can't take a private student loan and send it back to federal government. So you want to make sure that you understand that. And if you do, the standard plan might be a good fit for you, or it might give you the tools you need to compare a better offer in the private marketplace. Next, we have the graduated repayment plan. And this is a plan that you see very frequently with early career professionals. You just got that first job out of school, you're not making a ton of money, so you can't afford a high student loan payment. So, what happens with the graduated repayment plan is the payments actually start low. But every 2 years or so, that payment increases and it's designed to repay your loan in full over a 10 to 30-year payment period, depending on the type of loan that you have at your disposal. Now, all loans are eligible for graduated repayment plans as well, but just like standard plans, this is not a qualifying payment plan for public service loan forgiveness. For people who are trying to have their payments be low at the beginning of their repayment period, extended repayment plan is also an option. Because while they offer fixed payments over a 25-year payment period, they also offer lower payments that increase over a 25-year repayment period. Just like the two previous plans that we discussed, these loans will be paid off in full by the end of the repayment period if you choose extended repayment. But unlike the two previous plans we discussed, not all borrowers are eligible for extended repayment. If you're a direct loan borrower, you have to have at least $30,000 in outstanding direct loans in order to be eligible to repay them under extended repayment program. But the last similarity between the plans we've discussed thus far is that this also is not a qualifying payment plan for public service loan forgiveness. And there's one more plan we'll discuss that also is ineligible but has some similarities to the last two that we discussed, and that's the income sensitive repayment plan. Now, income sensitive repayment plan is similar to the last two loans that we discussed in that it's not a fixed plan per se. You can have these payments based off of your annual income over a 15-year repayment period if you're paying your loans back under an income sensitive repayment plan. Under income sensitive repayment plan, these loans will be paid in full by the end of period. So this is just like every plan we've discussed thus far. There is no forgiveness component to income sensitive repayment. While they do base your payment off of your income, they will still make sure that your loan balance is paid off in full by the end of the repayment period. Now, with income sensitive repayment plans, there are even more restrictions on the type of loans that can be repaid using this method. Because under income sensitive repayment, only loans that are FFEL loans, for example, a Stafford loan, can be repaid using this repayment plan. But the last similarity, just like everyone we've discussed thus far, is it is also not a qualifying payment plan for public service loan forgiveness. So why do I keep talking about public service loan forgiveness eligibility? Well, it's because it's a big deal. There is no limit to the amount of loans that can be forgiven under this plan as long as you meet the guidelines. And these guidelines are you have to work for 10 years while making payments at an eligible nonprofit or government entity. You have to have a certain type of loan, which is a direct loan, but you also have to be repaying your loans using a particular type of repayment program called an income-driven plan. Unlike any of the loan programs that we've discussed in terms of repayment thus far, income driven plans is actually an umbrella that encompasses four types of plans. There's the income contingent repayment plan, there's the income based repayment plan, there's the pay as you earn plan, and the revised pay as you earn plan. All of these are different types of plans that are all under the umbrella of income driven plans, and they share some similar characteristics. Under these plans, the payment that you make has literally no connection to your loan balance. It's always going to be based on 10 to 20% of a number called your discretionary income. If you want to watch a video about how that discretionary income is calculated, you can subscribe to our channel and check out our past videos, and we walk you through exactly what your loan servicer does to calculate this percentage. Unlike the previous plans, where the amount you pay is designed to pay off your loan in full during the repayment period, there is no guarantee under an income-driven plan that what you pay is enough to even meet the minimum interest that's growing on your loans. So what they do with these plans is you make payments over a 20 or 25-year payment, and if you don't pay your loans off in full before the end of that repayment period, any remaining balances will be forgiven. Now, that forgiveness comes with some stipulation. It's actually taxable in the year that the loan is forgiven, which is another video for another day. But the thing I want you to keep in mind with these plans is you're paying an amount that may not be enough to repay your plan in full by the end of the repayment period. And if you get to that point and still have remaining loans, that balance will be forgiven. But thankfully, this plan, these forms of repayment are the only types of payment plans that are eligible for public service loan forgiveness. I hope this video was helpful in demystifying some of the repayment plans that you have at your disposal as a federal student loan borrower. As I said, my name is Brenton Harrison of Ultra Borrowers Academy. If you haven't already, please subscribe to our channel and subscribe to the notifications so you can be made aware when new content is posted. And if you're an Ultra borrower, if you have a mountain of student debt and you're trying to find your way out of this hole that you're in, go and check us out at ultraborrowers.com and see what we have available at Ultra Borrowers Academy. We have many courses for people who are trying to have their student loan payment reduced. We have a full course for people who want to become masters of their student loans, both federal and private. And we even have cheat sheets available on things like income-driven plans like the ones that we just discussed. Keep an eye out for our videos and we'll keep posting them as frequently as we can. And I'll see you soon.